Okay, everybody. It's about 9:23 Eastern Standard Time on Friday, May 4th. There was the non-farm payroll announcement this morning. You've got to, if you remember one announcement a month, you've got to remember the first Friday of the month is non-farm payrolls. And even if you don't know what non-farm payrolls is, you have no idea what it calculates, it's really best that at 9 o'clock, at 8:30 a.m., you're completely out of the market. The non-farm payroll is probably the most volatile report for the U.S. dollar pairs of any of the reports because it's such an impact on inflation and interest rates. Okay, so the key here is understanding that at 8:30 on the first Friday of every month is non-farm payroll. Very, very important indicator for the U.S. market. So when non-farm payroll is out, you should be out as well. So right here we're looking at the market trading inside of our long-term trading lane, which means we're looking for the market to come up here to the top. Remember, target 2.0650 to about 2.0700 up in here. If the market does manage to break down, we're looking at about this 9610 area as our target for the downside. If it gets really fast, of course, it can get much lower, probably down to about 9520 on the downside. So, let me slow down a little bit here. We're looking at this flag pattern here. The flag pattern is still holding. We're seeing the market come right into support, just as we expected right here. Remember, this is from December, this is from January, December 06, this was January 07, this line here, December 06 was this line here. So these two areas now are going to be acting as containers for the market. Okay, so we have a zone of support. We've also got to remember, though, that this line here now, since the market is below it, is resistance. And until the market gets back above here, then we've still got to consider that the possibility is that the market will come down off of that. Okay, so keep that in mind as we start looking at these lower time frames here. There's really nothing forming up as far as other patterns or other support and resistance areas. Here was the pennant that I was trading yesterday, or I would have traded had I actually been healthy. That position actually did work out very well. We didn't get much of a follow-through. That, as I was saying yesterday, could be expected because of support here. And I remember I said the lowest that I was expecting was the market coming down here into 98.20. It never got there. It stopped over here. So let's talk about that briefly. The market gave us a very good entry. In fact, let me go ahead and go down to the 15-minute bar here. The market gave the entry right here. You can see that the market, after the entry, on this bar actually, was the entry. You can see afterwards the market did manage to spike up, gave the kiss goodbye here, and then immediately fell to the support area here. You can see I've got my 20 pip limit just so I can know when the market's made the move. And then it started its way up. You can see here it's stopping at the short-term moving average, stopping at the moving average, all the way down, comes down a little bit lower here, and then you can see now the whole process of rounding starts in, okay? And this rounding process is how you can tell support is coming into a market. All that basically means is you're getting a lower low, and then you start to see higher lows, okay? So you can see here that the market did manage to push up, finally closed above the moving average over here, giving you a very good exit. Again, non-farm payroll here would have caused you to definitely get out of the market, okay? So there's nothing really going on. At this point, it's Friday. Better to just wait and see what happens Monday, take the rest of the day off instead of trying to make something work. Non-farm payroll came out basically flat. Nothing changed. We'll just have to wait and see what forms up on Monday.